Gold has had a rough start to the new year, but in this video we'll be taking a look at all of the data that I possibly can and giving you my general outlook for 2024 and the metals market, but specifically talking mostly about gold and silver. Let's jump in. So first of all, I think we should have a look at 2023's performance on gold. And I think overall, you'll be surprised to see that gold, despite chopping around quite a bit, we did actually see a pretty good year. In fact, from January of 2023 until, the end of the year, we saw approximately 12-13% move on the overall metal. I mean, that's a great year regardless. Now, comparatively speaking, it's not so great, and I'll show you that now. So like I mentioned, comparatively speaking, when it comes to the NASDAQ and the S&P 500, you can see that the S&P 500 and NASDAQ both really greatly outperformed gold last year. And so I think that it is worth mentioning when it comes to relative performance that gold was not the shiniest, if you will, in the room. But I think 2024 could be an interesting change of pace, but we'll have a closer look once we get through all the data. So like I mentioned, starting out this year, it's not been so great for gold. You can see that in terms of price action, we've seen the first couple days be pretty horrendous for gold. I actually thought we would bottom out. As I will go ahead and preface with this video, I am bullish on gold in 2024. I already tried to buy once here already. It did not work out. We saw price break support. And so currently at the time of recording this, price action is looking a little bit bearish. However, I will get into why I think gold could rally back to the all-time highs and beyond. What I'm looking for as a trading perspective on a price action scale, I'm looking for price to give us a little bit more of a higher low, higher high, and kind of what we were seeing over here, which was in my view, a nice upward trend that did come to an end. You can see we had a really strong rally into the year end with this big bump off the idea that Fed interest rates or Fed funds rate was going to come down in 2024, which I still think to be the name of the game and one of the reasons that gold could really do well this year. While we're on the subject of gold, I figured it was also important to look at the price action of silver, which you can see we've put in another lower high and price absolutely took out the lows. We're now trading at 22.9, both gold and silver under a lot of pressure as the year kicks off. And what do we have to thank for that? Well, it's the dollar index. The dollar index is moving higher. We saw a bit of a bullish breakout for the dollar index, and that seems to have continued here into the first couple days of 2024. The question is this going to be continuing? And I think that if you start taking a look at like the daily chart, we're still in a solid downward trend. And my personal opinion would be that we're going to likely start to see this dollar move exhaust itself, roll over, and that should start to give us some bullish pressure on the metals. Again, we'll have to watch and see. There is some upcoming data that will be very market moving, especially NFP this first week. We'll watch jobs data, inflation data, all of which are very important to price action of gold and possible breakouts that we could look for. But I would be looking in terms of a possible bullish setup would be to look for that dollar index to roll over. We need the dollar likely to roll over to give us more boost to the upside on gold. Otherwise, if you get the opposite effect, if the dollar breaks out, you could see a prolonged push higher when it comes to the gold, on the dollar index, but that could propel to the downside the metals market. Okay, so now we're getting into some of the market data. What I've got here is a new tab that we added to the Edge Finder just recently. This is the US Treasury curve yield, or yield curve, sorry. And the idea here is that what we can take a look at is we can take a look at long duration bonds versus short duration bonds and take a look at their yields. And one thing that has me very, very concerned is that every time, I believe this is the case, but I believe 100% of the time that we have seen an inverted yield, meaning that of course this line trades higher, that of course short-term bonds are yielding much higher than longer-term bonds. When that changes and it comes back, what that often leads to is a recessionary period. And so we can see right now that we are very, very extended on the yield curve, and that if we do start to see a corrective move here, we could hear further talks about recession this year. Now I want to get something on the table here when it comes to gold. It trades higher and like rockets higher off of the idea of fear. And right now we see markets are still trading, in terms of their yield curve. Yield curve is quite overextended or inverted. The question, however, is, how long can that last? And it can actually take some time before this corrects and changes. But when it does correct, it is likely that we see some sort of a recessionary environment. Will that be this year? We'll have to wait and see, but that would give you an indicator. If this starts to trend back and starts to correct back the other direction, that the market could see recession, and hence fear could come into the market. And what does that do to gold? It shoots it up, right? The idea of fear, concerns, if you saw last year, one of the big moves, in fact, I'll show it to you on the chart here. Okay, so I'm back on the chart, and during this period of time where we saw gold rally substantially, it was off of the idea that Silicon Valley Bank, we had some bank failures going on in the United States. That fear really shot the price of gold up. And it did it again when we saw the Israel and Hamas situation kind of escalate. Gold prices really rocketed higher. So if you do get recessionary fears coming into the market, that could cause the dollar to slide substantially, which would give us that possible upward catalyst on gold to help clear those all-time highs. Here's a quick look at the inflation chart on the Edge Finder. What you can see is that inflation is coming down. And this is part of the reason, guys, that we're getting closer to that 2% target, in which case the Fed is expected to start really rate cutting. Now, the goal of the Federal Reserve is to see inflation not go too much below 2% or too much above 2%. So obviously when we were trading last year upwards of 8+%, the market was really creeped out by that. We saw stocks drop substantially, and part of the rally that we saw in 2023 was off the idea that inflation finally started to really cool meaningfully. Now, the question is with 2024, is that going to continue? And we have two scenarios here. If the market continues to see inflation cooling, I think both ways, meaning a huge drop in inflation or a moderate cooling, which is what would rally stocks, both of those scenarios could be good for gold. I think what would not be good for gold would be if you started to see inflation really tick higher. Now, that might sound a little counterintuitive, but generally speaking, gold does very well in a disinflationary environment, especially if you start getting into this scenario here where inflation's really cooling, likely because the economy itself is really struggling and people aren't out there spending money. If that happens, gold probably rockets to 2,500 an ounce. But that's not necessarily what I think. I think what's likely to happen is this scenario here. We continue to see cooling, and it is possible that we could see that 2% handle get hit in the coming 2 years or so. But I think those scenarios could be very intriguing for gold. Next up, we'll have a look at what institutions think about gold going into the new year using the COT data. And again, when we do these forecasts, I am generally a believer that you want to follow the trends that you're seeing, not try and predict a change in them. So when we see institutional money overall very net long on gold, this has me very bullish on gold into the new year. Now, again, we'll get to price targets as we get closer to the end of this video, at least my personal targets for 2024 and my logic behind them. But again, this is another bullish thing to tick off for the bulls, because again, the idea here is we can actually hover over this data and get a number. We have a 77.92% long ratio relative to short ratio on the COT data here. So smart money, big money is pretty much betting on gold on the long side, which I think is a very interesting play. Now, even in the latest money flow, we can see that gold has had a nice overall uptick. We can see, well, it was flat on this particular area here, but I'll show you, overall, we have seen a very institutionally bullish positioning on gold, and this is a nice factor to consider. A quick look at retail sentiment at the time of recording this video. We're still at 45, 55, so retail is pretty mixed on gold, whether they're bullish or bearish, so that doesn't really give us too much confirmation in either direction. By the way, guys, if you would like access to the COT data, retail sentiment, and all this data that we're presenting, my company A1 Trading, we build software tools for traders, and if you'd like access to a copy of this tool, you can actually get a discounted copy as we start off the new year. Just let us know that you are watching this New Year's video. Ask for the New Year sale when you send us a direct message using the first link in the description. When you use that link, you'll be connected to a representative who can let you know all the different questions you might have about the Edge Finder. A trained representative from my staff will help set you up with a copy of this tool so you can use this in your own analysis when looking at the markets. But again, message us for a New Year sale. We'll let you in on the discount, which we are doing for a very short period of time. Just let us know you saw this video. Another thing that has to be mentioned when talking about gold, and I don't like getting too much into politics, that's definitely not what the point of this channel is all about, but when it comes to markets, politics, and especially geopolitics and conflicts have a huge impact on the price of gold. We continue to see conflicts in the Middle East between Israel and Hamas, in the Gaza Strip, and we of course also have other things boiling under the surface, like for example Taiwan and China. We also have of course Russia and Ukraine, and all of these things create some tension, and that tension has sort of a potential tail end risk to it that could be negative for things like equities, stock market indices, but actually very positive for gold. Like I mentioned earlier, when it comes to gold's price last year, we saw a strong run up in the price of gold on the outbreak of the Middle Eastern conflict. And if that is to sort of escalate or become a bigger issue in any way, shape, or form in 2023, it likely would have very, very big movements to the upside for gold. Unfortunately, gold rallies on fear, and geopolitical conflicts have a huge amount of fear attached to them. So if there's any escalation, that is something that unfortunately I think could be in the cards. I'm not like I said, I don't make, fortune telling predictions here, but it is something to consider. And in my view, as kind of a trader, but also in some ways an active investor, I like to look at the full room, and even if I am bullish on stocks, I do like the idea of having some gold in the portfolio to potentially hedge the risk. Now, whether that be an investment or an active trade, most likely for me it'll be an active trade. I will be looking to trade primarily in the bullish direction for gold this year, at least for now, unless something changes in the inflation department that we talked about earlier. Another thing worth mentioning is that the VIX, which is the volatility index, something that I think every trader should be aware of and using in their analysis, has been falling real hard in 2023, especially after the rate cut expectations came out, but we're starting to see it potentially bottom out. And in fact, I'll show you some seasonality on the VIX and gold, which might be useful in your analysis as well. So here's the seasonality for gold as we go into January, February, March, April, May. All of these months are expected to be slightly positive, especially the early parts of the year for gold on a 10-year average historical basis. And again, this is why we use data, because you can observe these trends, and at the end of the day, they can make you money. That's the point of using market data. It's to help us look at lots of different pieces to help us maximize our potential of catching great trades. Like I mentioned, make sure if you have not already taken advantage of the New Year's sale, first link in the description, get access to the tools we've been working so hard to build. And again, I think we also need to take a look at the VIX here, and we have that data available to you. If you're an Edgefinder user, take a look at this. Start of the year, seeing a little bit of a tick up in volatility. And this could be, again, a nice thing because volatility tends to spike on fear. And fear is also, like I said, bullish for gold. So I don't find it too coincidental that these two things historically in the last 10 years have moved slightly correlated between the VIX and gold. All right, guys, and here's the big one. We are looking at the US debt clock. And when looking at the US debt clock, here's the thing. This thing just keeps going higher. The US national debt is at $34 trillion. That's not too little of a bill to write. I mean, and here's the thing, how are we going to pay for this? We're going to just keep printing more money. And you know the Jerome Powell meme where he's like printing the burr, kind of thing, print to go burr. Here's the thing, this debt has the potential to actually increase a big word that we keep coming back to in 2024, which is, you already knew it was coming, fear. Why? Well, if we struggle to pay our debts, bond yields could skyrocket. And that, of course, would likely come with alongside like the idea of inflation, and that sort of could tick up. And I don't think that that's the narrative for this year. I'm not saying that that's what's going to happen. I think, however, you have to consider it. And those are tail end risks. Gold generally sees its appreciation all of a sudden rapidly. And I'm not saying that that's going to be this year. I will be looking for bullish setups because I think just a moderation in inflation is enough to give gold a nice boost and potential retest of the highs. But if you want to see gold 2,500, 2,800 an ounce, it's going to be one of these tail end risks that I keep talking about. For example, really scary national debt concerns or downgrading in massive downgrading in the US's ability to pay back debt, something like that. That has the potential to be a big bearish catalyst for stocks and equities and the dollar, and a huge bullish one for gold, especially as the concern of a recession would massively come back into the picture in that scenario. All right, guys, the moment you've been waiting for. It's time for the price target. Let's have a look at the chart here. And what we can see is that on a monthly chart, I know, a long period of time, but I think if you're going to talk about year-to-year forecasts, my target for gold is, drumroll please, 2280 for gold approximately for the year 2024. Now, why? Why 2280? What is so magical about that number? Well, I'll show you why roughly. Now, let me just say, with forecasts, I'm not a big forecaster or predictor. I like to react to price. This is where I think price could go if the kind of consensus of the market continues to play out. I think that we could tag at some point in the year 2280. Why? Well, it's all of the fundamental reasons that I went through. I think that there are many possible bullish catalysts. The Edge Finder also has it as a bullish reading overall. You can see gold is getting a bullish reading across both the COT data, a lot of the economic stats, the trend overall. Seasonally, we're in a good time right now. Overall, also it's an election year, which I didn't even mention. It's another possible fear inducer, right? Elections are uncertain. They can cause tick-ups and volatility, etc. The reason 2280 is my target is because the last time we broke a long-term high over here, we saw a move following that close above of like 13.8%. Now, this was back in 2020 when huge fear took over the market. So I think that that 14% move is a bit aggressive in terms of what we could see this year. But again, many possible catalysts are looming under the surface. So for me, in terms of possible setups, what I'm looking for is that if we did see a break of the highs and a close above this long-term high of like 2060 an ounce, if we do start to see that come into play, this is a 10% move from the highs. So a 10% move approximately from this recent struggle high that we've had. We wicked higher, but I don't, I'd like to see if we were able to break that long-term high meaningfully of about 10% move, that would get us at around 2280 an ounce, which a 10% move I think is a reasonable expectation if we do see rate cuts or any sort of recession fears, election fears, etc. that we've talked about in this video so far. So there it is, guys. That's my idea for 2024, overall bullish. Now, in terms of the trading side, active trade management, that's where things will get a little bit more interesting because I think it could go all over the place until we potentially reach that target. But 2280 is what's on the table. We'll see if I'm correct about this. You can come back and flame me next year, or maybe I'm right. But again, that's my personal bias. Let me know down below in the comments. Do you agree with me? Do you disagree with me? I'm very open to criticism as long as it's constructive, as well as if you agree with me, let me know why. So leave a comment down below in the comment section. Okay, guys, and last thing I will say before we end this video is that if you would like to get access to our signals throughout this year, we will be trading gold, commodities, currencies, indices. We'll be trading everything between me, Frank, and Ivan, our traders here at A1. If you'd like to get access to the trades that we're taking when we take them so that you can read along and see why we're entering each trade, we enter all of our entries, exits, and full breakdowns analysis with each and every trade. If that's something that would be beneficial to you to receive to your phone or to your desktop, then make sure to sign up by sending us a direct message. Again, first link in the description. Let us know that you saw this video and that you'd like access to the New Year sale, and we'll work out a really good discount for you to come join in on the action, whether you want access to our software or to our signals service. Thank you guys very much for watching. Have a great day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.